Hey, good morning. Let's go over today's trade plan. So in the overnight session, the market has been balancing within a range with sell side active at yesterday's high. Heading into the open, our short-term bias is going to be neutral bullish. That means that we are going to continue to give edge to the buy side, but at the same time, we do have to read the market in real time and determine if there is sufficient strength to put in a breakout above 88.75 to 90.75. If the market is truly strong, then ideally we want to see it holding above the previous VPOC of 85 quarter. And that also happens to be the high volume node over the last 3 sessions. So if we can continue to hold above 85 quarter, and if we are seeing some decent upside momentum and broad market strength, then the door would be open for a breakout beyond 88.75 to 90.75. But if on the other hand we're seeing excess weakness on the day time frame and downside momentum, then we have to understand that the market could quite easily head down to 80.75 to 82.75, the initial support zone on the day. And even at that support zone, we're going to have to assess the market in real time to determine if it's worthwhile to go long there. Because if the other markets are selling off, if we are seeing some sustained and decent downside momentum, and the AD line is quite negative and trending lower, then we don't necessarily have to hold 80.75 to 82.75. It is a short-term area of support. Below that, we have yesterday's low at 78.75 and then support at 76 to 78. Now our larger time frame bias continues to be bullish, and for that reason, if the market gets exhausted into one of the support zones below at 76.78, at 74, and especially at 70 to 72, then the probability of responsive buyers jumping in is fairly high. And given that so far the market is running on fairly light volume, it would actually raise the odds of buyers jumping in if the market were to get exhausted into one of the support zones below. On the upside, if we can put in a high momentum breakout beyond 88.75 to 90.75, then we can quite easily tag 94.5 to 96.5, which continues to be a valid area of resistance, and it's still a spot where responsive sellers can be active. And in order to take that zone out and test the all-time high or print a fresh all-time high, we would again have to see that continued broad market strength and sustained and decent upside momentum, with the tick holding above zero and printing some decent values. Looking at the econ calendar, we have Chicago PMI out at 8:45 a.m. Central Time, followed by consumer sentiment at 9 a.m. Central Time. They're not really major market movers, but certainly something to be aware of. And then today marks the last trading session of the month. Given the recent bullishness in the market, it's unlikely that we're going to give up the gains that we've made across the entire week, but we don't necessarily have to put in a big breakout beyond the all-time high either. So in the event that you're long and holding into 94.5 to 96.5, you really have to question whether there is sufficient bullishness in real time, whether there is sufficient momentum and strength in real time to justify holding ES beyond 94.5 to 96.5. Now, if the other markets continue to print fresh all-time highs, then it could still make sense to hold the S&P up to 98 or possibly even a little bit higher. But if the other markets are off of their recent highs and ES goes up to 94.5 to 96.5, then the conservative idea would be to take profit at 94.5 to 96.5. So we don't necessarily have to short that zone. That's something we'll have to determine in real time. But taking profit at 94.5 to 96.5 would be a safe and conservative idea. Beyond the all-time high, we don't have any hard resistance, but given the recent ranges, 2408 to 2410 marks a range extreme, and if we continue to run on light volume, then it's very unlikely that the market would even get all the way up to 2408 to 2410. So those are the main ideas heading into the open. Again, our short-term bias is neutral to bullish, and we are going to have to see how the market is holding up in real time. If the market is truly strong, then ideally you do want to see it holding above even 85 quarter, and if it fails there, then we need to really assess the situation in real time and determine if it still warrants going long at 80.75 to 82.75. So those are the main thoughts. Let's see if the buy side can maintain the recent control, and we'll take it from there.